Always got to remember to turn on the microphone. Hope you're having an awesome, awesome start to your morning. We got a lot to discuss this morning. If you could just do me a quick favor, just confirm that the audio visual is good and we'll kick it right off. Today's obviously Monday morning, August 23rd. Let me fix that. This is all live. There's nothing behind the scenes here. Let me know. Let me know if that if the audio visual is good. We'll kick it right off. We'll get started. A little bit of thunderstorms down here in Florida, actually coming down pretty hard this morning. If you could just do me a favor, drop in the click in there. Let me know where you're calling from. Let me know you're actually watching from. It'd be kind of cool to know. It seems like we have members all over the world, which is what a crazy, awesome world that we're in right now. It's really amazing that we can be speaking to people on a whole different side of the planet. When I first started trading, we were actually still stuffing envelopes to get people to join these kind of meetings and attend seminars in New York City. All right. So we got a lot to discuss today. Obviously, market bounced back super hard on Thursday and Friday after we took a really nasty hit on Wednesday. So the Fed is actually back in the spotlight today, specifically Jerome Powell. So last week, in case you didn't know, the Fed minutes came out and spooked the market. They talk about interest rates and inflation, and those two little things, the word tapering, really sent the market for a doozy. But we came back, which is pretty impressive. We actually wrote in our pre-market morning note this morning that 2 days of a bounce, amazing. We've kind of pulled back into that zone between the 20 and the 50 period moving averages. Still a buy zone, but not exactly a perfect buy zone. So it's interesting because I'm actually going to talk about this book today. I'll tease it really quick. It's a book that a trading book, probably one of the first trading books I ever bought in 1999. Actually, that's how old this book is. It's hardcover, and it's about position sizing. We're actually going to discuss position sizing today because I'm going to show you on the charts, and actually we'll pull it up right now before we get into the other stuff. So we're actually going to we'll do this. We'll actually hop on right over. So one of the biggest things, one of the most normal things that everybody watches, Gavin in the UK. That's awesome. People from Virginia, Michigan. All right, awesome. Virginia Beach, Jordan. I actually have a very good friend who's building a house in Virginia Beach right now. Brad and Tara from Texas. Gary from New Jersey. I was actually in New Jersey for 3 years. I owned a house near Rutherford, right around the block from then it was called the Meadowlands. Miami Beach. All right. You're with me down here in South Florida. Raphael, good morning. How are you? Okay. So the big thing I want to talk about, which is starting out with this book and probably one of the biggest lessons that so many traders just never get to the point of learning. Let's see. Ganka Kaya from Istanbul. You see, we're talking to people all over the planet. This is amazing. I love that. Is position sizing. Something that you have to have in your head all the time, which a lot of retail traders or new traders, however you want to call yourself, you really need to understand that every deal is the same. Some deals are awesome and you should be trading bigger, and bigger is relative. We'll get into what that means in a second. Some trades are pretty good, but you don't want to go in full share size until you have some feedback from the market. You want order flow to step back in and trade a little bit bigger after we get that feedback. Okay, let's see. Charles from Northeast Kansas. Welcome, Charles. We're actually just watching the replay of Smallville last night. Superman and Lois were big comic book fans in this house. You can see some of them on the background. So obviously Smallville, Kansas. So here's what I want to talk about. You can see here when the SPY pulled back last week, Wednesday, and Tuesday, Wednesday, really Wednesday was the day that we really started to get the Fed tapering. The Fed minutes came out in the afternoon. Market started to sell off and sell off hard. And this is the 20-period simple moving average. This is the 50-period simple moving average. So I want to give you a framework for something that is super important and really critical to long-term success. And you could actually write this down because this is what separates somebody who's a chart reader from somebody who is a trader. And I just want to start out by saying trading and chart reading is not the same thing. And it really comes down to chart readers are looking for patterns and traders are looking for ways to make money. There's a giant difference between the two. And also I want to give everybody just a quick heads up. These calls are usually 20 to 30 minutes after this call. Then I hop over into our private call in the boot camp. So if you could please do me a favor, if I'm providing value on these, just click down and subscribe. That would be awesome. I'd really appreciate it. But here's the bottom line. Using something as simple, and actually this is what's kind of cool here too, is trading can be stressful, right? We can all admit that trading can be stressful, but we want to reduce that stress as much as possible so that we can make definitive decisions without thinking too hard. So when we're talking about these charts right now, I just want you to visualize the 20-period moving average and the 50-period moving average. And you want to write this down. Again, obviously everything we're doing here today is for educational purposes. You make your own decisions. But if your stock is trading above a rising 20-period moving average and the 20 is above the 50, you can go in with a little bit higher conviction level on your position sizing. If, as the SPY was over here these 2 days, below the 20-period moving average, but above the 50, you can still look at that and consider that as a bullish environment where you should be looking to buy. But in that environment, you should not be looking to have full share size because you want to get a little bit of feedback that order flow steps back up and pushes it back above what Dow theory calls the short-term moving average. So the intermediate term would be the 50, the long term would be the 200. So this book here, I'm going to actually come back on the screen here. This book was one of the original books that I learned. You can see it's called The Trading Game, and the author's name is Ryan Jones. Let me actually see if I can get into the cover of the book. That's the name of the book, The Trading Game, and the author of the book is Ryan Jones. I don't know if I can get any more detail than that, but this entire book, see The Trading Game, it's not saying that trading's a game. What it is saying is that trading is a math game. And he breaks down the entire process of multiple different ways of position sizing. So what we just talked about on the screen here with the 20 and the 50-period moving average, using the market as a perfect example, while it was above the 20, we sized up and traded a little bit bigger on our initial entry and then looking to add a little bit after that. In this particular instance, when you pull back and you're below the 20 but above the 50, you go in with a little bit less position sizing. You're waiting for feedback from the market. And if and when, like it did on Friday, it gets back above the 50 and trades above the 50 on above average volume, which you can see on the bottom of the chart over here, you tend to get follow through, which is what you can see now. The SPY ETF is actually up 1.75. So $1.75 up from Friday's price action. So now what we're looking for follow through. One of the biggest things that we talk about in our private community and in all of our training programs is you need that line in the sand. You need to have, you need to know how to read the tape. And reading the tape now, setting up the week, we're actually going to shift over to a different chart. We're going to shift over to the weekly chart. So it's great that we're rallying higher today. Now, this is a weekly chart. This represents the price action from Monday through Friday. And this is actually where we get a lot of people taking things out of context for what we do, which is super important to understand the context. So we just talked about the SPY. We just talked about follow through. We just talked about position sizing and what price action we want to see. That's the pre-market game plan. We're actually going to make a distinction today between the pre-market game plan and a tracking journal, and we're going to use the energy stocks as an example. So you're really going to like that. So stick around. So what we're looking for now, coming into the day, looking for follow through, coming into the day with the pre-market action moving higher, we are now going to use Monday's opening price. So when the market opens at 9:30 this morning, you need to have a line in the sand. So if this is the opening price, we want to see stocks and the market stay above Monday's opening print. So wherever the SPY opens up this morning, that opening print is the one price, the only price, the number one price for us to determining, are we getting follow through off of last week's buying to take us back above the 50. And by the way, you can use that for all of your swing trading ideas. You just got a golden goose there. Keep your swing trading simple, whether it's day trading or swing trading, but specifically on swing trading, shift on over to those weekly charts and know that line in the sand. That's your tape reading level, which now takes us over to some bigger ideas we're going to talk about, which is Bitcoin and Bitcoin stocks. Bitcoin, if you don't know, BTC USD. We're going to actually pull that up. Actually, let's take a look at Bitcoin futures. That's probably the easiest way to do it. And we're going to jump over to, I'm going to actually move this out so you can see it a little bit cleaner. If you happen to be new to trading futures, and specifically in this instance, trading Bitcoin, you can see that there's different expiring contracts every month, which is what futures trading is. Futures trading has contracts that go out every certain amount of time. So you can see here, Bitcoin futures expire every single month. If we go out to the E-mini S&P futures, you can see that they're every 4 months. So what you need to do is to pay attention as a trader. If you're watching futures trading, you need to make sure where the volume is in that most recent contract. And now we're heading towards the end of August. So I'm actually shifting over to watching the September contract. Okay, so the weekly chart, you can see here from 1 week to the next in Bitcoin futures is making higher highs, higher lows. And here's the opening price. Here's where it closed. Here's the opening price. Here's where it closed. Here's the opening price. Here's where it closed. So as of right now, we are above the opening price in Bitcoin. So if you're looking to be long Bitcoin this week, or we're actually going to take a look at the Bitcoin mining stocks, that's the price. That's the price that we need to remain above. You can see that's August 23rd. So that line in the sand, if you look up in the top left-hand corner over here, the opening price is 48,935. So as long as, and again, I'm using this as an example, as long as the price of Bitcoin is above 48, what was that number? 48,935. That's the line in the sand to feel confident or have conviction that the buyers are still there. The order flow is still stepping up from Monday's print. If it rallies and pulls back, you act like a pro and you either reduce share size to get out and look for another position or another line in the sand that you can lean on. So that's kind of really what we want to talk about. So as we're rallying here, and this is really where a lot of traders really need just that little bit of extra structure. You can clearly see here that we're rallying for the last 3 days. We actually finally got out of this trading range. We finally had to punch through 47,000, got through it pretty convincingly, but now we need to stay above this line. So this is where you start to use multiple time frames. Weekly chart, using it as the line in the sand. That's also called tape reading. And then you time it with the daily charts. So the higher time frames are for our direction. That's where the order flow is committed over a bigger window. And again, just to reiterate what order flow means. Order flow means smart money, deep pockets, people with a lot of research, a lot of money, paying higher prices over time. That's what you need to focus on. Don't use the word uptrend, downtrend. Use the word order flow. So you are literally visualizing, if I'm going to take risk, how long has smart money or deep pockets been buying that stock or that security or whatever it happens to be? Is it 1 day, 2 days, 3 weeks? That's what you're looking for. The more obvious that they're paying higher prices, the more that volume is increasing while they're paying higher prices. Just think about it. They're loading up on their inventory, which means they spent more money, which that's where you get in there and piggyback. So you go to higher time frames for order flow, then you drop down to the shorter time frame for timing your entry and your risk. And that's what we do all day, every day. So if we hop on back over here and we look at the order flow, this is that period that we just looked at on the weekly charts. And now you can see the last 4 days, there's been buying, and specifically the last 3 days, smart money has paid higher highs and higher lows. So the order flow is there. The volume is there Thursday and Friday. And obviously Monday here, it's still pushed down. So that's what we're going to keep an eye on. So as long as Bitcoin future stays above 50,000, that's really kind of the line in the sand that we're going to be watching. Now, I don't trade Bitcoin futures. I still want to see a little bit more regulation in that whole industry. But there are certain Bitcoin stocks that as a community we've been trading. You can actually see here Mara last week, which is actually up as much as 12% last week. So Mara is one of those stocks that I day trade pretty actively. So I'm going to be watching Bitcoin futures to trade Mara. If Bitcoin futures does exactly what we just described, stays above that tape reading line in the sand, I'll continue to look for spots to buy Mara. Riot, not as relatively strong, but in that same area. So if I had a choice between the two, Mara and Riot, I'd be looking at Mara right now. And we get a lot of questions about lower priced ones, and BTBT kind of meets that criteria as well. I'll give Aldo all of the credit in the world for calling out BTBT. I have not personally been trading that. Aldo and Fred Davis in our community have actually been calling these stocks out. So that's what we're looking at on the Bitcoin side of things. Obviously, something big to pay attention to this week is the conversations going on in Jackson Hole, Mississippi this week. Jackson Hole, Wyoming. What's interesting is it's not actually there anymore because of what's going on in the world right now. They're actually doing this digital as well. So what is the verbiage that we do not want to see? What do we not want to see have happen here? We don't want to see them talking about aggressively changing interest rates. We don't want to hear them talking aggressively about inflation. If somebody asked me, did I expect that to have happen? Yeah, I do expect it to have happened this week. We'll see. We'll see. We'll let the price action tell us. But here's the big thing, very similar to the Fed minutes coming out last week, is you need to be aware that it's going on so that you are not shocked, which biggest thing that you need to know. And actually this was written down. I'll put this up on the screen right now. All good traders have posted pads all over their monitors. And this is one that's on there right now. Respect the stop loss. Knowing all of that's going on in the market this week, you need to respect the downside. I don't care what position you're in, especially if you're an active trader, though, you need to have your stop in the market, which means you're expecting something to happen with that big circumstance this week. Want to hop into two stocks that have earnings this week that we watch quite a bit, actually. CRM, which is a stock that triggered a day trade last week coming out of our optimal entry. Now you can see, looking at the bigger picture, it's finally cleared these levels. It's still kind of absorbing that news based on the Slack acquisition last year. We do have a lot of resistance here, but CRM has earnings this week. So be aware of CRM earnings this week. That's a really big deal. And Peloton, two stocks that I really like to trade quite a bit. Peloton does not have any bullish order flow right now. You can see it's actually down again right now. And you can actually make a case that it's in a trading range. Since this unfortunate incident where there was an injury and they're still trying to work their way out of that whole negative news. But one of the things we talked about last week in our one of our private coaching calls was centered around which stocks to trade. And it really comes down to day trading versus swing trading. You need to make two different kinds of lists. There's one list of stocks that you trade every day because they have good volatility and good liquidity. So you have volatility, which means you could make money, and liquidity means you can get in and out of those stocks on a regular basis. Peloton happens to be one of those stocks for me. Mara happens to be one of those stocks for me. Apple, Oracle, those kind of stocks. And the electric vehicle stocks, quite frankly, the Chinese electric vehicle stocks. None of those necessarily have great long-term order flow right now, but they're in play pretty much every day. So those are my list of go-to stocks. Then when we dig a little bit deeper and we get into the nightly game plan, then we start to look for stocks and the leading stocks in the leading sectors. And you can see here, last week was not really that good from a bigger picture perspective, but over the last month, we do have some opportunities, and healthcare is actually one of those windows that we're going to be watching. So what I'm going to get to, let's see, I just got a couple of comments in here. Franz, yeah, I honestly, Franz, thank you so much. I think we have the greatest community on the planet. We have really respectful people who take trading seriously, and everybody's willing to help each other. So I honestly, I really appreciate everybody being here today. Let's see, Juana. Okay, thank you so much. Awesome. Let's see, John Lash. So we're using last week's opening price. No, John, I said it very clearly. Today's opening price. Let's actually review that. Okay, I don't want to turn this into something longer than it is. We're using today's opening price to determine if there's order flow this week. So as I said, it doesn't matter. Let's actually go to the weekly chart, and we'll use the SPY as an example. So if we use last week's chart of the SPY, you could actually see that for the better part of the week, there wasn't bullish order flow. It wasn't until the end of the week that we started to get some buying. And actually, you know what? We can actually pull this out on the weekly chart a little bit more clearly. If we go to Monday's price action, right? Here's the 13th. Here's the price right there. This technically right here, when we made new all-time highs on Monday of last week, a week ago today on the 16th, that was technically the opening price of last week. And we needed to see that hold in order for us to have conviction that the order flow was still there. So this is kind of cool. Let's think about this. So let's actually pull John's question back up. This is actually why we keep trading so simple and why it's so important to continue to have this sort of continuing education. John's question is awesome, and I'm sure a lot of people had that same question. But more importantly, remember this book that I just talked about, okay, The Trading Game. Position sizing. Raise your hand if you got beat up last week. Raise your hand if you thought swing trading, especially last week, was like all over the place. Like, I don't understand. Why can't I get a grip on any of these trades? It's because the order flow was not obvious and not consistent from Monday's print. So if you look at this chart of the SPY, let me actually pull this out a little bit so you can see it a little bit better. There's the opening price, and here's the price action during the week. Okay, so what does that tell us? What does that tell us about how easy and simple trading could be if we have really simple ways of looking at the market, very similar to what we're talking about right now, which is having that line in the sand. And it could be swing trading with the opening price on Monday. It could be day trading with today's opening price. Now, again, you still need to understand how to make money. There's a difference between finding ideas and making money. And that's a lot of what we cover kind of behind the scenes. Like I said, this meeting will probably end right around 8 o'clock. And then I jump into the other meeting with the members of our boot camp. If you want to learn about that, there'll be a link below. Oh, by the way, there's also 2 new videos below too. One talks about trading game plan, and the other one is how to make the stock market making money. If you want to finish this video, click the link below and watch those videos. But my point is this. Trading, the actual art of trading, which is placing the orders, is not the hard part. The hard part is what we're talking about now, finding good ideas. But the skill part is understanding what happens between entry and exit. So what we're talking about right now, and you can see this on the screen right now. Let me make that a little bit bigger. This was last week's price action in the SPY. So last week was a little bit more challenging price action, which means that we had to lower our position sizing before we got bigger because it wasn't obvious. So now you have something to head right into Monday saying whether or not we are looking at obvious or back and forth. If we're looking at obvious, we can hang on a little bit longer, maybe trade bigger, maybe trade more position size. If we're going back and forth, we reduce the position size, narrow our list, and that's how professional traders expect to make money in any type of condition because they're recognizing the conditions and then trading accordingly. Now, what's kind of interesting about that is it's very, I use this all the time. It's very similar to driving. You don't just drive 80 every day. You'd like to, but you don't because you crash. And that's what most inexperienced traders do is they trade the same share size all the time. They trade the same expectation all the time. And that's wrong. Quite honestly, it's absolutely wrong. You have to learn to drive or trade in different conditions, and you're going to manage those things differently. It's really important to understand. And that's why we always start out with sector rotation, looking at the market, because I would love to see you do the same thing, which is really understand what conditions do we have right now? How obvious are the conditions right now? And then that will reflect your profit targets, your stop loss, and your position sizing. So if you write anything down, again, all good traders have Post-it pads all over their monitors. Write that down now. This is really what matters. I'm going to pull this on the screen right now, pull it up. All of these little things you want to have for yourself. Pro tip number 1, respect the stop loss. Number 2 is understand the market conditions that you're in, which actually now takes us into something else. We're going to talk about the difference between a tracking journal and a trading game plan. And we're going to use the energy stocks as an example right now. But first, actually, I want to talk about Pfizer. We're going to go right over here. Okay, and you can see what Pfizer has done over the last bunch of weeks. It's actually up this morning. If you did not happen to see the news on Pfizer, this is pretty big news. FDA expected to fully approve the Pfizer vaccine next week. Now, obviously, we're not going to talk. This is not a political statement or any of those kind of things. This is just simply us talking about stocks. Pfizer will have activity this week. Now, remember, we're talking about this news, and you want to take advantage of that volatility based on the news. You now need to know what is that line in the sand? Which opening price are you watching? So we're going to watch Monday's opening price. Is it above or below that? If you just go in there as a trader and say, oh my gosh, that's really good news, I'm going to buy it, you're not trading. You're not trading at that point. You need to know what that line is. If it's above that line, buyers' order flow is still stepping up, and you could piggyback that. If that's the line in the sand on Monday or when the news comes out, and I'll give you a really, really good example from within the last week or so. If the news comes out and it's trading below, so like that's where it was, and this is you're guessing at that point. You're not trading with the news. As a matter of fact, at that point, it's probably sell the news. I'm going to give you a good example within the last week or so, which is this stock. Earnings came out here. That's the line in the sand that we were watching, and look at how the stock has traded since then. No guessing. You don't need to guess. Trading is simple. It's quite frankly, it's easy to understand what to do. I didn't say it was easy to make money. That's the whole other part of the boot camp. Easy to understand what to do when you have structure. So what we're talking about today, and especially, I'm doing this especially because it's Monday and there's a big news story out with Pfizer. There's also price levels in Bitcoin. You should be able to look at them like that. But now I'm going to segue over into something different. And this is really where price action and Tracking journal versus trading journal, trading game plan. So trading game plan are stocks going into game plan today. Tracking journal are interesting things that you see when you do tape reading between price action and volume, where you say, I'm going to keep an eye on those stocks. I'm going to set alerts, but they're not trades yet. And this is what separates somebody from, oh gosh, I'm always late, I never find the best entry, from somebody who is on top of this every single day, and you put them in the tracking journal. And we're going to talk about energy stocks. So I'm actually going to put them up on the screen right now, and we're going to look at price action and volume. Okay. And I'm actually going to take the moving averages off of the charts here, because what's more important here is what's actually going on. And we're actually going to take a look at, we're going to start out with CLR. And what we're watching for, again, I'm telling you right now, there's no obvious order flow here, but volume is starting to step up. Hess. See that? Volume is starting to step up. So we have a longer term bearish order flow right now, which you can see here over this time. It would need to break this line and get above it. But something on the tape is changing. Look at that. Push down, bullish reversal into well bid. Both candles on heavier than normal volume. PSX, same thing. If we look at it, longer term downtrend, which again, this is actually how you work the charts. You make sure that you have your lines in the sand as far as order flow. You can see that this is the trend there. But look, volume is starting to step up on the way down. Look at volume pausing here. Volume stepped up and a reversal. One more we'll take a look at is Hess and MTDR. You can see volume spiking here. So now, are these ideas trades today for me? No. But the tape is changing. If you remember going back to the beginning of today's call where we talked about order flow, we talked about order flow means smart money, deep pockets. Again, it doesn't matter who it is, institutions, hedge funds, banks, Warren Buffett, it doesn't matter. All we know is somebody with a lot of money commits capital, and we see that in price action because the candle's green. We see that in volume because it's above what it normally does. Now, did that happen 1 day, 2 days, 3 days? Energy sector, so mark this down, August 23rd, early in the morning. Energy sector is starting to see spikes in volume with bullish tone to it. They're still in bearish order flow. They haven't reversed. I'm not looking to buy them, but they're going in my tracking journal. What am I looking for? And this is, we're going to actually finish up on this. What am I looking for? I'm looking for this weekly order flow to convert, the daily order flow to convert into weekly order flow. So these are 2 days of buying. I want to see now that buying turn into green candlesticks that do this. That is what trading is about. That's where trading becomes infinitely easier, because you know what you're looking for. Remember, if it's hard to find, it's not there, which means that there's going to be some times in the market where you say, I don't see anything. And that's okay, because you're not going to put your money in harm's way unless it's obvious. That's a big thing to keep an eye on. I want to talk about Robinhood just to finish things up right now, because Robinhood has got some interesting news, and this is a big deal. And it's really about their business model. Street starts Robinhood. So the Street Insider covered mixed views, concerns centered around payment for order flow and unsustainable retail trading levels. So if you paid attention to some of the earnings reports that came out this week, so we'll get to earnings reports first. A lot of the earnings reports were this year versus last year. So this quarter versus the height of coming off the pandemic lows. Very hard numbers to beat, because in this industry specifically, everybody was home and the amount of trading accounts that opened exploded. So we're putting together the pieces for an argument for whether or not buying Robinhood stock in the long term is a good idea. So that's the first thing. Are the numbers they did last year sustainable? Probably not. But a deeper, bigger picture is their business model sustainable, which is payment for order flow, because they're literally saying we're decentralizing what's going on here and everybody can get involved, but they're actually sending those orders out and getting paid for sending those orders out. That's a big difference. So two different things there that might not be the greatest news for Robinhood. Doesn't mean that we can't trade it. Remember, volatility and volume, those are the two big things that we want to be paying attention to. So a lot to unpack today. Keep an eye on the Bitcoin mining stocks. We're watching the energy stocks for reversals. We're watching CRM and Peloton this week. If everybody could do me a favor, we're actually going to finish up because I have to get into the bootcamp private call that we have. And if you want to learn about that, there's a couple of videos below here that you can watch, as well as a link to learn about that. Type in, to finish up the call right now, what stocks are at the top of your list this week to trade? Let me know about them. Just put them in there really quick. I'm curious, because when we have these calls every day, I'd love to hear how your stocks played out this week. Type in there really quick. Let me know. Give me the one stock that's at the top of your list for this week, Monday, August 23rd. I'm going to answer a couple of questions. Boot camp, I don't have time every day for 30 days. I work. How would that work? Well, that's actually a pretty interesting question, because the boot camp is for day trading and swing trading, and everything that we do is recorded. So, for example, we go into our meeting at 8:30 today. Even if you can't watch the game plan meeting that we do live of which stocks we're trading today and this week, you can always click on the link and watch it at lunchtime or whatever it happens to be. Also, I do a video at night every day for the next day, so you always have plenty of time. And swing trades are a big part of what we do in the boot camp as well. Let me see. If you want, again, Janet, thank you for just click the link below. You'll find out everything about the boot camp. Let's see. NVIDIA. David, I'm with you on NVIDIA this week. AJ, Baba, I'm not ready to touch Baba yet. There's still too much news on there. Maybe on a day trade or that kind of stuff. Let's see. Can you recommend other books we can learn more in order flow and tape reading? Order flow and tape reading, you got to start with Reminiscences of a Stock Operator by Jesse LaFay. That's a big one. Let's see. Pags. All right. Tom DiDonato. Okay. Awesome. Pags. Let's see. English, etc. HLT. All right. Yeah, those stocks have been popping up a little bit too. That's another one. The airlines and cruise line stocks saw a little bit of bullish order flow. They're in my tracking journal. I'm not trading them yet, but definitely meets that criteria. Let's see. Case. NVIDIA. Yeah, I'm with you on that one. Case actually broke out, and so did, again, as David's saying here, so did Adobe last week too. So there's going to be some pretty good ideas this week. Definitely going to be watching Pfizer. That should be in play this week as well. All right. All right. So we're going to call it a meeting, everybody. I just want you to know how much I appreciate that you joined me here today. Really, really awesome to have this kind of interaction before the market opens. Again, if you didn't happen to watch this meeting live, you can always just click on the link. But what I would suggest is clicking below the video. You can learn more about the bootcamp. You can also learn actually about how to read the tape, how to make the stock market make money for you. And I have a longer video about game planning, which is kind of cool as well. So click those videos below this video. And there's also a link down there to learn about the bootcamp if you want to learn more about that. And if you're not sure, you can also always email us too at support@stocktradingpro.com. So I just want to say how grateful I am that you joined me here today. It means everything to me. We'll do this every day, 7:30, Monday through Friday. Come prepared. The more prepared you are, the more questions we'll have, and that'll make the call be even more engaging. All right. Have an awesome day, everybody. I have to head over to the bootcamp game plan meeting, which starts in a little bit. And let's go make some money today. Let's have an awesome day. Thank you so much, everyone.